Hello and welcome to the Weekend Investing Daily Bytes. We are shooting episode on 24th of March 2023. Yet another day of market mayhem. We just can't shake off the weakness in the markets. The market continues to fall on one pretext or the other, whether it really matters to India or not. And today's pretext was Deutsche Bank, one of the largest banks of Germany, and that bank is trading 8 to 10% lower. There is fear that there may be some write downs in that bank, and this story is currently developing. So we just got out of the fears of Credit Suisse and UBS taking over that institution, and now we have the Deutsche Bank saga that is unfolding. So, no escaping the global headwinds. India, by itself, quite untouched by all this. Our banks are reasonably strong. Balance sheets are probably in the best of their health versus last decade, 2 decades, 3 decades. Credit cycle is all right. I think earnings next month will tell us whether we are on the right path or not. But it does seem like this is more external, and of course we were not trading cheap, so a lot of emerging market funds, etc., who may be offloading, continue to sell, and we do get a FI sale figure on a daily basis. So let's look at the markets. On the Nifty, you can see that this trend that started from 1st of December has continued down, and we are going lower. Maybe we will go retest this 16,750 mark in this move or lower. Can't say. I was hoping that this congestion will give way to some rise in the last 2 days, but I was wrong. This probably needs more time and more pain to come through. So we will need to wait out. There is no other option actually. Um, Getting away from the market, just dumping your stocks and going away from the market never helps, because the market does come back, and we've shown several episodes on that functionality of the Indian market. So never sort of leave the market in disgust or frustration and go away, because that is not the way the market will reward you in the future. Today's heat map is very clear. All red. Bajaj Finance, Bajaj Finserv Twins dramatically beaten down. Of course, this new taxation on debt mutual funds, etc., will also have repercussions in various costs of funds for NBFCs and other, sort of second degree repercussions of this, which will become clear in the next few days. But in general, it is portraying that we are moving towards a higher tax regime. Uh, I don't want to use the word tax terrorism, but it does seem like every inch of space that is left to tax is being taxed, and STT on options and futures also has gone up. So, I mean, all these will result in more people going out of the market, more cost of doing business, no simplification of doing business. So all that does not augur too well for the future. But being the resilient market that India is, over a course of time, all this will be taken into stride and will move up accordingly. Tata Steel and Hindalco were other big losers. Adani stocks also were losing. L&T, ITC, Britannia, Tata Consumer, Reliance, ONGC, Coal India, Mahindra, Maruti, Titan, Axis Bank, State Bank, HDFC Life, State Bank Life, HCL Tech were other losers. So I've pretty much counted all the Nifty stocks. I think only very few Nifty stocks which were in gain. So Kotak Bank was one of them, and Power Grid marginally, uh, and Cipla marginally, but nothing really to talk about. You can see the entire sectoral overview flat from minus 0.2% to 2.3%. Real estate, despite strong sales shown by many players, getting bashed down. Metals bashed down. PSU banking always in the leadership of either gainers or losers in the last many months. infra stocks, commodity stocks. So just all around selling has happened today, and that has not gone down well for the last 1 week. The biggest losing sector has been real estate at minus 4.5%. Over the last 3 months, it has lost 7%, and in the last 12 months, it is down 14%. If you see the last 12 months, or rather, let's take the FY23 because we are now very close to the end of the year. Uh, the worst performing sectors this year have been IT at minus 23%, metals at minus 16%, real estate at minus 18%, and uh, energy stocks at minus 12%. So these have been, along with pharma, of course. So all these have been the worst performing. The best performing, despite the recent fall, has been PSU banks at 30.8%, autos at plus 15%, and FMCG at plus 24%. So, the sectoral trends are very, very clear for this last 1 year. If you look more deeper and in the breadth of the market, this support of the mid cap, Nifty mid cap, is kind of giving away now. There may be some sort of more fall, maybe, but it was jiggling around this level, but today it has closed at the lowest level since August of 2022. So this is also nearly at a 52-week low, the mid cap segment. The small caps also closing at a new low of the last about 9 months. So here also new lower lows are getting made with lower highs. So the trend is definitely lower. We may get a bounce, but the trend is well established on the lower side for now. Banking, Nifty Bank also had broken down here and it was trying to move up, but today that move has also been belied. So Nifty Bank also is a lower low, lower highs sort of a trend. This also continues to go down till this pattern will change. There is nothing much to report in the performance metrics. Nifty, Next 50, and CNX 200 all down. All indices down 0.8%. Weekend investing strategies also down between 0.9% on top 10, Nifty next 50 at 0.5%, MI Evergreen down 0.8%. Only NG 50/50 was up mildly. In the mid and small cap segment, index was down 1.3%. Both the strategies here in this segment also down similarly. In the small cap strategies, small cap 250 was down 1.5%. Both the small cap strategies also down almost there. MI25 a little less because it holds some cash. In the all cap strategy bracket, we have CNX 500 losing 0.9%, MI30, MI80H, MI80H2 also losing similar ground, MI all cap losing somewhat less ground because it has holds a lot of cash. So this is the summary for the weekend investing products. Uh, One of the tweet insights that I wanted to share with you was this two charts of Credit Suisse Bank and Deutsche Bank, and these are charts of the last multiple decades. So the insight here was the last couple of decades, especially since 2008, where these peaks were made, have been a disaster for these global banks. And if global banks are in that situation, that tells you the health of the global economy actually to some extent. So while we can be sitting pretty in India, but the health of the global economy is very much portrayed by these charts of these global banks. And of course they do have some dividend payouts, but minus the dividend payouts, there have been no capital gains for the past couple of decades on the biggest banks of the world. Another insight was on this comparison of the US 10-year yield versus the India 10-year yield. So, this orange chart is the US 10-year yield, which broke out of its long term trajectory last year, whereas the Indian chart has retained its trajectory so far. So my sense is that maybe we are not going to break out of this trajectory, and this is the top of the range for us, and we will turn down here. And of course, the U.S. Treasury, the U.S. yield has also turned down, but it is still above this trend line. So maybe India is leading this trajectory here. But of course, the US market is the mother market of the world. So we will do what it does, but we have resisted a change of this long term trajectory, which can really cause a lot of upheaval in our markets if interest rates go up dramatically. So it does not seem like that is happening. A currency also has been very, very stable last many months. So hopefully this US 10-year yield will come back into this long-term range, and we will also move down towards 6.5%. Right now we are at 7.3 on this, so that will give some relief to a lot of sections in the economy. Spotlight of the day is on this stock, TTK Healthcare. These section of the market update is purely to point out some great price volume action happening in some stocks. It is not a recommendation to go out and buy it. It's not an advice. It is just a filter to showcase some of the movers, and then you have to take your own trade setup and see if you can find some value in this information. So what I noticed today was that it moved up despite the great weakness in the market today, and a huge volume candle here happening. Multiple folds of the daily average volumes here. So some action is happening. I have not tracked this stock closely, so I don't know what exactly is happening. But if in case there is no news about this and this has already happened, that does mean that some great news is about to come. So look at this stock, and this may be on your watch list if you are a trader in the market. So this is all I had for today's market update. Thank you so much for watching this. Please do share this video. Please like and subscribe to our channel, and let us know what is working good in this or what is not working well for you in this update. Thanks. Bye.